Welcome to Digitech Lifestyle News and Crypto Reviews in today's news and today's breaking news. In a stunning announcement that will reverberate across global markets, the Financial Stability Board, FSB, has issued a stark warning. They state that the crypto industry is barreling towards a critical tipping point due to the increasing integration of crypto assets with traditional finance. This deepening link between crypto and TradFi, they warn, is accelerating towards a dangerous threshold where the volatility and shocks from crypto could spill over and destabilize the entire traditional financial system. And they identify stablecoins and Bitcoin ETFs as the primary accelerants driving this rapid integration and pushing us towards this precarious tipping point. They highlight that the scale and speed of crypto adoption is not just increasing, but doing so at a rapid pace. And they emphasize the interconnectedness of the crypto market with core traditional financial infrastructure as the central source of risk. And we have 3 important messages to share from today's bombshell release. But first, if you value timely and accurate insights on financial markets and the economy, please hit the like button and subscribe for more updates. Here are the 3 core takeaways from the FSB's groundbreaking report. First, the FSB warns that crypto is approaching a critical threshold where its increasing integration with traditional finance is creating significant systemic risks that will be increasingly hard to contain. And they identify 2 key factors driving us towards this precarious tipping point. One is the proliferation of stablecoin products and the growing usage of stablecoins, particularly those pegged to fiat currencies. And the second is the growing number of Bitcoin ETFs and other crypto-related financial products now being offered by traditional financial institutions. Now, what exactly does the FSB mean when they talk about reaching a tipping point? Well, they're essentially saying that the crypto industry is on a trajectory to become so deeply intertwined with the traditional financial system that any significant turmoil or shock within the crypto market could potentially spill over and destabilize the broader traditional financial system. And this concern is not limited to the collapse of individual crypto firms. While that is certainly a risk, their primary worry is the potential for contagion to spread from crypto to traditional markets and institutions. Think of it like this. Traditionally, the financial system operated in relatively isolated segments. Crypto existed in its own world, traditional finance had its own separate space. But now these 2 worlds are increasingly colliding and becoming more interconnected thanks to innovations like stablecoins and crypto ETFs. If this trend continues, it won't just be the crypto market that suffers during a crypto winter or faces liquidation during a crypto market shock. Traditional banks, markets, payment systems, and other financial institutions could also get dragged into a maelstrom of instability and losses. That's the alarming prospect the FSB is highlighting. This concern is shared by a host of international regulatory bodies who have been sounding the alarm about the dangers of crypto contagion. The Bank of International Settlements, BIS, the European Central Bank, ECB, the Bank of England and the U.S. Federal Reserve have all recently emphasized the escalating systemic risks posed by crypto assets and the urgent need for robust regulatory measures to mitigate these risks. For instance, the BIS released a comprehensive report in March 2023 identifying the most pressing threats from crypto and calling for swift international cooperation to address them. Similarly, the ECB highlighted the rapid pace of innovation in the crypto space and the potential for these developments to pose risks to financial stability both directly through crypto exposures and indirectly through contagion to traditional financial institutions. The second core takeaway from the FSB's report is that the primary concern now lies in the potential for contagion to spread from crypto to traditional markets and institutions, not just the failure of individual crypto firms. Think of it like this. In the past, the main risks associated with crypto were seen as fairly isolated to the crypto market itself. Regulators argued that trouble in crypto wouldn't really affect traditional finance. Now the situation has evolved significantly. As crypto becomes more integrated with traditional markets, problems in one sector can more easily spill over and impact the other. To illustrate this risk, consider the recent turmoil in the banking sector earlier this year. Several major banks around the world faced turmoil following the collapse of Silicon Valley Bank and Signature Bank. While these challenges didn't originate from crypto, they did shed light on how interconnected the financial system has become. The increasing adoption of crypto by traditional financial institutions has created channels for contagion that did not exist just a few years ago. For example, some regional banks held significant deposits in Silicon Valley Bank, which in turn held investments in illiquid assets. When SVB faced trouble, these other banks felt the impact even though they had no direct exposure to SVB's crypto holdings. Similarly, if a large bank or payment system with extensive exposure to crypto were to face difficulties, the fallout could reverberate throughout the wider financial system. It's this potential for contagion that the FSB is highlighting as a major concern and a key reason why they believe that crypto is nearing a critical tipping point. Third, the FSB emphasizes the urgent need for robust regulatory frameworks and heightened vigilance from global regulators and traditional financial institutions to manage these emerging risks before the tipping point is crossed. The FSB calls for international cooperation to develop comprehensive and consistent policies that address the unique challenges posed by crypto assets. These measures should include enhanced prudential rules for traditional financial institutions that hold crypto assets or engage in crypto-related activities, strengthen consumer protection frameworks to safeguard investors and borrowers in crypto markets, and closer monitoring of the shadow banking system to identify and mitigate emerging risks. In addition, the FSB stresses the importance of effective communication and coordination among regulators, standard setters, and other policymakers to ensure that appropriate action is taken in a timely manner. The ultimate goal is to foster innovation while mitigating risks. The FSB acknowledges that crypto assets have the potential to enhance financial inclusion and provide new services to consumers. However, they argue that these benefits can only be realized if these innovations are developed and used in a safe and sound manner. By implementing robust regulatory frameworks, international authorities can help ensure that crypto assets do not pose a threat to the stability of the broader financial system. So there you have it. The FSB is ringing the alarm bells, urging the global community to take swift and decisive action to mitigate the systemic risks posed by crypto assets before we reach a dangerous tipping point. Time will tell how regulators respond to these warnings and what steps they take to protect the financial system from the risks of crypto contagion. Stay tuned. Lastly, it's important to understand that the scale and speed of this integration is a key part of the story. The FSB stresses that the integration of crypto assets with traditional finance is not just happening, it's happening rapidly and at a significant scale. This dual aspect makes the issue particularly challenging. Think of it like this. When a new financial product or market segment emerges, it usually starts small. Over time, if the product proves useful and in demand, it gradually grows in size and influence. But the crypto market is bucking this typical trend. It's growing not just in size, but at a pace and scale that's unprecedented for a new financial product. This rapid growth is pulling in substantial capital and creating intricate interdependencies between crypto markets and core traditional financial infrastructure. And it's this combination of scale and speed that's concerning for regulators and financial institutions. It suggests that the crypto market is maturing and evolving faster than anticipated, which could increase the potential fallout if problems were to arise. And finally, let's discuss the key message of the FSB's report. It's a straightforward yet powerful statement that encapsulates the essence of their warning. The report highlights that the rapid integration of crypto assets with traditional finance is pushing us toward a dangerous tipping point. This convergence, driven primarily by the emergence of stablecoins and Bitcoin ETFs, is creating a situation where volatility and shocks in the crypto market could trigger systemic crises in the broader financial system. It's a stark reminder that crypto's instability, often characterized by wild price swings, security breaches, and market manipulation, could have far-reaching consequences if it's not properly contained. The FSB emphasizes that this risk is not theoretical. We're already seeing signs of crypto's growing influence on traditional markets and vice versa. The report underscores the urgency of the situation. Reaching this tipping point is not a question of if, but when, without effective mitigation strategies. This is a call to action for global regulators, financial institutions, and policymakers to come together and address these risks before they escalate. The message is clear and unambiguous. It's high time for coordinated and comprehensive action to ensure the stability and integrity of our financial system in the face of crypto's disruptive challenges. If you found this video insightful, please hit the like button below and stay tuned for more updates on financial markets and the economy. Your support helps us continue delivering valuable content. Thanks for watching.